Hi, welcome to the TRG Money Minute. I'm Devin Shute. So this week is another important one for South African finances as the National Treasury prepares to table an emergency budget. Now, we haven't had one of these in ages, and the reason for it is that since February, when Tito Mboweni put out his original budget, a huge amount has changed. Government finances have been thrown upside down, and the economy is really struggling to find its feet in this COVID environment. So what we can expect is that our government debt is going to balloon to probably more than the GDP of our economy in the coming years. Now, this has been a result of increased spending by government, some in response to COVID, as well as the lack of any meaningful growth in our economy. Also, what's very important is that should government fail to implement these structural reforms that have been so elusive to it, we're going to see debt continue to rise to quite precarious levels. If this happens, it means that government's going to have to look for other sources of capital. These could come from foreign markets, so we could raise capital in foreign markets. It could come from increasing taxes, or possibly from approaching international finance institutions like the IMF. Last week, thankfully, we had the National Prosecuting Authority grow some teeth and make its first arrests. Now, although its head, Shamila Batoya, has been in the seat for over a year, it's taken her quite some time to come to the market with this first prosecution, as she moved to prosecute 7 individuals who are allegedly responsible for the collapse of the mutual bank VBS. These prosecutions have been widely welcomed and should also make various politicians who have been closely linked to this bank heist very uncomfortable as the investigations take their course. And lastly, it appears as though there's some life returning to the South African retail sector. South Africa's largest property company, Growthpoint, says that the footfall in shopping malls is starting to recover and is at about 80% of what it was in June last year. Now, as the lockdown has eased, we've seen large national retailers, particularly value fashion retailers, fare better as they trade in basic necessities. Thanks for watching. Have a good week.